triple tops and bottoms. The next reversal pattern we will talk about are triple tops and triple bottoms. And these are variations on the head and shoulders pattern and are less commonly observed, but still important, still common enough that we should learn about them. So we'll describe it by talking about the main difference between a triple top and a triple bottom. Alright, so now in these next 2 points, the way I have written this is that when you read it, so for example it says for a triple top and then in brackets bottom. Right, so essentially this is a statement that you have to read twice. So the second time you read it, you say for a triple bottom, and you only read what's in the brackets. The first time you don't read what's in the brackets. Alright, so for a triple top, the main difference is that the peaks at the top are at the same level instead of the right and left peak being lower than the middle peak. Right, so instead of the head and shoulders where you have the middle peak that's higher than the other two, in a triple top all the peaks are at the same level. And obviously the neckline is there as well. So that's the essential difference, right? It's essentially 3 tops and they're all at the same level. Triple bottom, again I'm just going to read the sentence again, this time put in the parentheses. So for a triple bottom, the main difference is that the troughs at the bottom are at the same level instead of the right and left troughs being lower than the middle trough. Right? Sorry, being higher than the middle trough. So again, instead of the trough being the lowest one at the center, the head, they're all going to be at the same level. Fairly straightforward. It's just a mirror image of the triple top. So another important point to note for volume is that when we have a triple top, as each new peak is made, volume should be declining. Right? So triple top indicates that the price will start a new downtrend, so that we should see a declining volume on upward movement. And for the triple bottom, as each new trough is made, volume should also be declining. Okay? And correspondingly, it should be increasing when the price goes back up. Right? Which we talked about earlier. And like with the head and shoulders pattern, a breaking of the neckline following the third top or bottom constitutes a completion of the pattern. So it works in a really similar way to the head and shoulders pattern. Right? It's just the level of the peaks or troughs which is different. That's the only difference. And we said earlier that, a lot of the patterns we'll discuss are just variations of the head and shoulders pattern. And this is an example. And we'll see this more when we go on. So we'll now follow the similar format we have throughout this lecture. We'll look at a diagram first and then look at a real life example. Triple top diagram. So here we have a triple top diagram. And you can see the main difference between the head and shoulders. One is the length of this peak. So in the head and shoulders one, the peak would probably be up here somewhere. But in the triple top, all these are at the same level, the 3 peaks. Right? So there's 1 peak, 2 peaks, 3 peaks, all at the same level. So what does the price do on a triple top? Well, the price is sort of going up in an uptrend. It makes a top here, comes back down to the neckline. This now is the support level. Goes back, makes a second top at around the same level as the first top. Comes back down to the neckline. Bounces back up. Makes a third top at around the same level as the first and second top. Makes sense. Carries down to the neckline. And then again, the crucial point here. The price goes down and breaks through the neckline. So when it breaks through the neckline, this indicates a completion of the triple top pattern. Okay? And also the start of a new downtrend. Now, like with the head and shoulders pattern, we may see a return move up here before carrying back down. And the same issues with volume apply. So for example, as the price is going up here, there should be less volume as compared with when it's going up here or here. Right? Which indicates that the up move is less sustainable, so we're more likely to see a down move after that. Okay, let's now turn to a real example. Triple top example. Now what we have here is another chart, and this is the NSE index, okay, which obviously we're all very familiar with. as we've looked at it in this course already. This is the NSE index from the end of 2010 until August 2011. And what we have here is a triple top in this example. Now hopefully you should now maybe already be able to see it before I even point it out, now that we've done a couple of examples already. But what we'll do here is identify a triple top and show you how it works. The triple top on this diagram, okay, I've positioned it to be in the center over here. So essentially we have three tops here. We have 1, 2, 3. Right, as you can see, these are all at the same level. So that's your triple top. So how does this work? Well, we have the price going up here in an uptrend, right? We have our neckline, which is going to be kind of like that. Okay, again, it's not an exact because of this. We have the price going up, making a top, coming down, bouncing off the neckline, making a second top, which is at around the same level as the first top, coming back down to the neckline, going back up, making a third top over here, coming back down, and then this breaking of this neckline here, okay, that signifies the completion of the triple top pattern, and after this the price carries on quite significantly downwards. In fact, all the way down here, you could even argue the downtrend goes on all the way till there. So this is quite a significant break in the trend, and the triple top acts as the starter, or the way we can identify when this is going to occur. Alright, so now we've looked at triple tops. We'll now look at triple bottoms. Again, we'll do the diagram first, and then we'll do the example. This way we get a really good understanding of what we're doing, so it's important to be thorough on all of this. Triple bottom diagram. Now we have the diagram for a triple bottom. This should be very familiar to you by now. As you can see, it is just the mirror image of the triple top. So we'll quickly go through it. So we have, again, the blue line here is our neckline, which acts as our resistance line. Alright, so price is in a downtrend, it's coming down this way, it's going down, makes a bottom or trough down here. Then the price goes up, and it hits the neckline, the resistance line. It then bounces off that, carries on back down, makes another bottom here, which should be at around the same level as this bottom. Okay, after that it goes back up, again hits the neckline, the resistance, comes back down, and makes a third bottom. Right, so this is the triple bottom. Following this, it goes up, and this again is our most important point of the diagram. The point where it breaks the neckline going up, this signifies the completion of the triple bottom pattern and the start of a new uptrend. Alright, so the price goes up here. And as I said, if we have a return move, we could see the price come back down and then go on up. Right, but again, new uptrend occurs when this resistance line is hit, the neckline. Alright, simple enough. Let's now look at a real example. Triple bottom example. So here we now have another chart. This one again is DIA, which is the Dow Jones Industrial Average. This is not exactly the Dow Jones Industrial Average. Is it actually an ETF that tracks the Dow Jones Industrial Average, which is why the numbers you see, for example, it starts at 103, is not doesn't correspond to the actual value of the index, but the moves are the same as the index, right? It's an ETF. But anyway, that's not that important because we just want to identify the pattern most of all. So we have here the index going from September 2010 until looks like a late February 2011, and the triple bottom is going to occur here in the middle of the graph, right, in this area here. And we have here our three bottoms, 1, 2, 3, okay, and our neckline, which is going to look like that. So what's going on here? Well, the price is up here, So it's kind of going in a downtrend here. It crosses our neckline at this point and makes its first bottom over here. Then it bounces back up to the neckline here, goes back down, makes a new bottom here, bounces back up to the neckline here again, then makes a new bottom here, and again this point, our crucial point, it breaks the neckline. Following the break in the neckline, it carries on upwards, and it is the start of a new uptrend. Now, these movements obviously are not that huge. The size of the troughs is not very big, but nonetheless it's still significant enough that this does serve as a triple bottom, and we can see that following the triple bottom, the price carries on going upwards.